The JSE is firmer with global markets mixed as investors digest U.S. jobs data coming in weaker than expected. Viv Govender is the portfolio manager at Rand Swiss, and he joins us now for the latest market moves. Viv, thank you very much for your time this afternoon. Let's start with an overview of how the markets are faring at midday trade.
Yes, the overall market is up about 0.60%. The resources sector is up quite nicely, almost 2% higher, 1.8%. Industrials, unfortunately, are only up about 0.1%. And looking at the financial sector, we see that's basically also up about 0.15% here. So the resources are the reason that we are actually up, as strongly as we are. The rand currently sitting at about 18.96, which is good. I mean, in the currency trading, levels are important, like psychological levels. And if we can stay below 19, there's hope we can get a bit stronger later on. And in terms of the commodity prices, we are seeing Brent crude oil at about $76 a barrel, 76.70. Around about just under $77 a barrel, which is a bit lower today. And the gold price, remains quite high at the moment. Sitting at about 2023, off, it goes all-time highs, which is earlier in the week, but still above the 2,000 level.
Let's take a look at this. After gaining 2 points in the third quarter of 2023, the FNB BER Civil Confidence Index reverted back to the level of 41 in the fourth quarter. Help us make sense of the findings.
Yeah, look, I mean, there's a couple of issues we have that is a bit negative in South Africa. Most certainly, I mean, we saw an improvement in terms of Eskom for a little while anyway, and we're back to, of course, to more deeper load shedding at the moment. But we had a few months that we were looking a bit better. But also, I mean, we are seeing other issues coming into play, like Transnet, I think, which is a significant issue affecting mostly businesses, not so much people at the moment, and that's why maybe in the consciousness Eskom looms higher. But, Transnet, I think, is also an issue, and I think that's affecting things. But also, you talked about the fact that we are seeing a bit of a slowdown happening globally as well. Chinese numbers coming in a bit disappointing, the U.S. numbers showing a bit of weakening in that economy as well. And that's what I do think that, the reason we have rate hikes is to basically slow down economies, and we've had rate hikes for quite some time. It's not surprising to see some economies slowing down.
Right. The South African government has requested an urgent meeting with officials in Botswana after the Southern African nation extended the prohibition of fresh produce imports from South Africa until 2025. What's going on?
Yeah, apparently it's like potatoes, tomatoes, onions, and other produce. They're trying to become self-sufficient in food production and cut their import bill, apparently, which kind of makes sense. I mean, in terms of things you want to be self-sufficient in, as any country, you want to make sure that you can produce your own food. It's quite a dangerous thing to be dependent entirely or to a large extent on imported food. Makes you more vulnerable as a country. That being said, I mean, one of the issues that's always been plaguing African countries is the lack of trade between, neighboring countries. Often you'll find, a country like South Africa will export and import more from China than it would from a country right next door to it. And, the more restrictions we have between countries, the more it's going to hurt not just the economic growth, but consumers as well. But like I say, it is one of those areas in which, there is a justification, from a security point of view, from a stability point of view as a country, where you want to make sure that you can actually produce, the food that you eat.
Prosus is preparing to spin off PayU and plans to have the unit in a listable form by the end of 2024. Talk us through the developments.
Yeah, look, I mean, the thing with Prosus and like Naspers, large extent, they have a huge, very valuable holding, and they've had some what people often call the rump, the little extra. And this extra is not very, not really valued well by the market. The market basically looks at 10 cents and says that's the value, and in fact there's a big discount to that. So in net effect, the rump is basically has no impact in terms of the value of the company. If they were to split up some of these little extra companies that they've invested in, and some of them are not extra in the small, also little extra companies, when some of them are quite sizable operations, it's just that compared to the 10-cent operation, it's quite small. And so therefore, if they're able to split them off, it makes sense for the company because they're not being properly valued as being part of a process at the moment.
Viv, thank you very much for your time this afternoon. Portfolio manager at Rand Swiss, Viv Govender.